This simple strategy can help you triple your rental income if you learn how to optimize for both STR and MTR markets in one. Most people typically pick one or the other. We ask them, hey, do you do Airbnb, aka short-term rentals, or do you do mid-term rentals? We typically hear the one or the other. But I believe that you should be able to have your cake and be able to eat it too. But there's a very specific way to do that. And we use a hybrid approach. And the way to do this is I want you to be able to say that you're a short-term rental operator and a mid-term rental insurance operator. Now remember, STR is anywhere from short-term rental less than 30-day stays. MTRs is typically 30-day stays or more, which now you kind of break into the niche of insurance housing, or I should say temporary housing. And then we go down a layer deeper and we pick the mid-term rental insurance niche because it is the most profitable one. However, the number one question and most common question that I get is, how can you guarantee that you'll get a mid-term rental insurance contract? Well, I have news for you. You can't, right? So maybe you should stop watching, right? No, absolutely not. Because there is a way that you can put yourself in a position to get them as often as we do. As often as, hey, you get a 6-month contract and then you get another 4-month contract and then you get another 8-month contract. And lo and behold, all you need is 1 or 2 contracts a year to make yourself 100% occupied at a premium. And that's why we love it. However, it doesn't always work out that way, does it? However, it doesn't always turns out that you will exactly have an insurance contract right when the other one ends and the other one begins. Although it's happened multiple times to us in the past, it's not always the case. And for that reason is why I believe if you're an Airbnb operator who's trying to get into the mid-term rental insurance space, well, first of all, you've got to get into that space to assure you're maximizing your profits. But then when you get there is how can you guarantee that you're going to have an insurance contract right after? You can't, and therefore that's why you should do the hybrid model. And vice versa, if you're a midterm operator, then you should definitely always live on one of the most highly frequent platforms that exists out there, and that's Airbnb. But why don't we break those two down a little bit? So we know that short-term rentals is less than 30 days. We know that. That's very common for what is considered a short-term rental for anywhere across the country. So one of the things that I first recommend if you're going to invest is you are going to want to make sure you're in a short-term rental friendly market, because I do not want the hybrid model to not be an option based on where I spend, based on where I am. So what I want you to do is I want you to underwrite every deal like a short-term rental deal. I want to make sure that you're typing in short-term rentals ordinances or short-term rental regulations in your county, and that way you can see it ahead of time. Do they allow short-term rentals? If they don't, I walk away, because I don't want to be in a situation where I'm only banking on a 30+ day contract. It takes away from the hybrid option. Now, that's on the short-term rental side. That's how I underwrite every asset type. And I want to make sure I put myself in a position to cater to that first, because it will cover the other half. If I'm able to do short-term rentals in that market, then I'm already ST market friendly, and that's great to begin with. Now, part 2 of this is understanding on what is going to make the mid-term rental model possible or doable, and how do you optimize for that market? Well, because we're optimizing for a very niche approach, let's understand what that niche is. Most people see mid-term rentals as the niche of travel nurses, 30 days or more. It could be anything, employees coming over. Maybe it's on Airbnb, you have that toggle to 30-day plus. That's one thing, that's great. But the reality is you're not going to get, again, how do you optimize for that mid-term rental? And even if you do, is it as lucrative? Well, it's not going to be as lucrative the insurance space, and that's why we focus on the insurance space, because the insurance space typically means that you have a policy holder or a displaced family that's being relocated because an unforeseen event has occurred to their home. Now, it's not always natural disasters. That's where people go first. It's anything you could think of under the sun that falls underneath the home not being accessible, not being usable for that time being. And because it is baked into the insurance, when you're paying your mortgage, your bank is not going to allow you to pay for a home without insurance on it, part of your mortgage. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it and continue on with the gems in this video. Has home insurance coverage that when something happens to your home and you're unable to live into it, there is an area called coverage D, which is also known as an additional living expense that you can tap into to relocate temporarily, whether it's a hotel as phase 1 and then phase 2 another temporary home until your home's problem is solved. Now for that reason, we want to pick homes that have high values, or aka homes that are larger, because it means they're going to have a larger coverage D. Coverage D is also known as the dwelling value of a property, and when that value is derived, which is typically 25% of the home's value, or the overall value of a home. I think the napkin math that's very easy for you to use is the dwelling value is typically going to be similar to what you would see on Zillow, but use that as a napkin math because sometimes land value can be a little bit more expensive, right? But the thing is, you are still in a position right now where you're going for a home that is typically a single family home, and because it is large enough, we're able to the investors who are savvy like you are watching this video are able to make their furnished accommodation, their home, available to those who have been displaced. And their insurance company is going to pay a premium, pay us a premium, pay you a premium, the investor who is known and privy to this information that you're watching right now. Now, optimizing for both STR and MTR market means that you're in a short-term rental friendly market. You're available on one of the short-term rental OTAs, but you're also available as on the midterm rental platforms, and we pick insurance because they're the most lucrative. Now, we still leverage Furnish Finder, we still leverage Zillow, we still leverage all the insurance databases, and that is how you actually start setting yourself from the pack and start making yourself available in these insurance relocation databases that exist. What does that mean? Does that mean I'm going to Allstate or State Farm and dropping my properties in there? No, I'm actually going to go to the insurance relocation agencies that work directly with those insurance companies, because these insurance companies do not have the time to go to Joe Schmo next door and see if he has properties available. They'll hire a third-party agency to look for housing on their behalf. That agency will have a markup on front, which you don't need to worry about. You just name your price and they'll have their markup sent to the insurance company. And that's why we love, because they have big budgets, because again, they have that coverage D that they can access. Instead of me optimizing for, again, the person next door, the travel nurse next door, I want to optimize for a larger premium corporation that has the dollars to be able to foot my bill, to be able to afford my price, my premium price, because I know I'm solving a larger problem. How? Because I'm going for larger homes, right? And larger homes have a larger coverage D. So it's really important that we first focus on the air market, and then we focus on the MTR product. And the reality is there's always an MTR market and an STR market. You just need to know what the regulations are if they allow it. If there isn't an STR market, I stay away from it with a 10-foot pole. But if there's an MTR market and an STR market, then now I'm running the hybrid model where I'm making my properties available on both the OTAs, aka the Airbnbs of the world for short term, and I'm making my properties available on the midterm rental market areas like Furnish Finder, Zillow, and all the databases you can think of, like the ALE Solutions, CRS, THD, all those, Alacrity, all of those companies that are one of many in the nation that caters to these temporary housing options for these policyholders. They're looking for these options, and you want to make sure that you are a temporary housing provider in those areas. So this is the strategy that helps you not only be able to get short-term rental bookings when in need, right? But then you also want to make sure you're in a position to still serve those in the midterm rental markets. Now you can get the best of both worlds. So you can live in both an STR and an MTR friendly market. how you're optimized, how you present your product, where you present your product is what's going to determine if you're running a hybrid or not. Now, of course, having the right asset in the right zone that can allow you to do short-term rentals, the right asset, my buy box, which is going to be another video that you can check out, 4 to 6 bedroom home plus, and there's more to come for it with that. But that is where we start the conversation of being in the right area, having the right type of asset, living on both of the databases and both of the platforms that the short-term rental and MTR markets exist, so that you can run the hybrid model and have your cake and be able to eat it too, so that you can 3 to 5x your rental income so that you can maximize your profit. That is how you take 2 different market style strategies and operate them under one roof. All right. So if you got value from this video, make sure you check my video called Clear Buying Criteria for the Hybrid MTR Success. Click it here and it'll give you the blueprint for you to be able to apply what we just learned in this past video.